The following is a presentation of TFNN. Trade what you see with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Hey, looking good, Billy Ray. Feeling good, Lewis. Good morning, folks. After a very wild day, we are going to start the show with our friend Norm Winsky. We are going to present him with the Gold Grammy Award for Stock Timing Excellence. Norman, are you there?
Yes, sir, Larry. Good morning.
Good morning, Norm. Listen, I had probably more email and calls about what you had been talking about. As a matter of fact, several weeks before it had even happened, and that was the importance of, the 17th of September with Mercury coming retrograde. For those of you that are new to TFNN, Norm was on my show back on May 19th when we had Mercury going retrograde on the new moon, and at that time, he was also telling us that the market was topping. And so we have a rule here at TFNN, Norman, you'll always be welcome as a guest as long as you don't give us any bad information. The first time you're wrong, we want to welcome you to the cheap seats and you'll be able to watch it from the bleachers.
Okay.
Hey, listen, I posted your chart that you had about the huge change in chin window. Tell the folks what actually happens when Mercury goes retrograde, because that's what classical astrology is used quite a bit, that never sign contracts or do anything important. Is that correct?
Yes, sir. Do you want me to explain the mechanics of that, or the
I want you to explain them. Just give us a brief description of the mechanics of it, because it only happens, 4 times a year or so?
Right. It's due to the relative motion of the Earth to the other planets. All the other planets have a point where they stop their it appears, we know that they physically don't do this, but from our point of view here on Earth, if you were to go out and plot the planets in the night sky, you would notice that it appears that each of the planets will stop its motion and then reverse its direction periodically. And so when Mercury stops its motion and when it's from its normal forward direction, and then turns to go backwards, that's called retrograde. When it's going backwards, it's called retrograde. When the planets stop their motion, that's called a station point, and then they reverse their direction. That's one of the best forecasting tools I know.
Now, how about when does it go direct? How long is it in retrograde motion?
Usually about 21 days.
Okay. Now, does it vary from 21 to 26, or what's the band?
It can vary a few days, but it averages about 21 days.
Happens to be a Fibonacci number. Well, listen, I just wanted to bring the folks up to speed on this spectacular call that you had, and you have a course that you offer for free on astrology for beginners, and I think that those that have an interest should try to contact you. So why don't you give them your contact information now, and then we'll have you on in another few. Well, say not next week, but the following week we'll have you on as a guest also. So why don't you give us that information, and it'll also post it into the Tiger website too. So why don't you fire away with your information?
Okay, my name is Norm Winsky, Normwinski. You can reach me on my landline. I'm in Florida, in the USA, at 239-594-3939. That's 239-594-3939. You can call me on Skype at norm.winski. Or you just punch in my name. I think I'm the only Norm Winsky in all of Skype land. Or you can send an email to norm@normwinski.com. That's norm@normwinsky.com.
That sounds great. Well, listen, I sent a case of Manischewitz to you yesterday, but you know how bad the UPS is, and especially during the holidays, you don't want to drink it till after the 22nd.
Right out.
Hey, thanks for coming on. We really appreciate the work you do, Norm, and all kidding aside, that's a bonsai call. I've seen a lot of good ones, but that had to be the best. I wish I could take credit for it, but I couldn't, but that was a beauty.
Well, you're a very generous guy to have me on your show and give me and point this out to folks.
Okay, well, listen, we'll be talking to you soon then, okay?
All right. Thanks a lot, everybody. Have a great day.
Okay, thanks again, Norm. We really appreciate it. Norm Winsky of Astro Trends. Now, if we add just a little bit to what he was telling us, all I'm going to do now is to show you what was happening with the market during that time, because while we were watching Miss Yellen, I don't know if she's married or not. I never figured it out. She's a Princess Yellen, I guess. But you'll notice that the market, you'll see the two red arrows there. Basically, these are parallel arrows that are both equal. You can see the ABCD pattern, because the original reaction to the report was the S&P dropped 25 handles, and then it rallied 50 handles to the upside, completing the ABCD up around the 2010 level that Mr. Z in our room certainly pointed out to his benefit. And from there, it dropped all the way down. And as you'll notice now, we are already below the lows of that the whole day's trading. In 1968 was that low. We're trading around 1959 or so in the E-mini S&P. Coming in here to the open, so we'll have to see if this is going to be a I don't think it's going to accelerate much from where we are right now, but this is a major top, it looks like, and we certainly could. In fact, wow, I just noticed that we just dropped down to, we dropped another 10 handles since I've been on the air. 1950 now in the S&P. We get below 1938, boys and girls, it's lights out, because that's going to be the weekly reversal, and boy, it's going to take a whole lot of things to change that, and we'll see what's going on. We've got the bond market. That was one that was a really disappointment to me, because I wanted to get the bonds down to the 150.20 level, and they only got to 151.28. They missed it by, 1 full point. And so now they've rallied 4 handles already. We're ready to take out the highs of last week. And that tells us that this bond market has finally found some type of a bottom. The notes hit the exact 61% retracement yesterday, down at the 126 and change level, and they're a couple points higher than that. So interest rates are coming down right now, but this is just a short-term bounce in interest rates, folks. That's all it is. Rates will be going higher. It's just they're putting it off. I noticed today on Bloomberg that one of the announcers was saying that the interest rates would be put off until March of 2017. Well, they can put it off whatever they want. What's going to happen is you're going to run into a situation where there's going to be some really gyrations in the market, because the bond market and the note market have already told us that rates are going higher. This little rally that we're having here, this is just nothing more than an oversold condition. Now, if we should get bonds above the 160 level, then I would have to say, well, that's a little different story, and then would be able to, to say that this is not the way that it's going to be. So we're having some good volatility. Now, we're also having some really good volatility in the euro, and I think that's one that we ought to take a look at, because it's the leader of all the financials. And this is a trade that I was looking at for last night, and so far it worked out okay. But basically what you're looking at, Janet Yellen's been married 37 years. Wow, that's pretty good. Okay, anyway, you can see the market went up and made a key level up at that 1114.60 level. The 1.618 expansion of that move was 1114.76, so the spread was only 20 pips. So the risk on that was very, very small. It's already backed off 50 pips from that level. So and it's completed the larger ABCD pattern going back to September 9th. So both of those are telling us that that's what we're looking at when we're watching those things. Now, since we've been on the air, we did hit that 786 retracement in the gold up at that 1141 level. That was the maximum band that we were looking at for potential to see the gold get to that level. We were trying to get the silver up into the 19. Silver came within 2 cents. So we're looking for silver to make 15.45. It got to 15 43. So that's another one that looks, real interesting. So we've got to, keep an eye on that. We've had there's a lot of selling coming in right here before the opening. So it's going to be interesting to see if this thing really, we're only 10 points, we're only 10 handles away from a weekly reversal here. And this is before the market opens. But frankly, folks, realistically, if you look at this, with the market down this much, and most people don't understand technical analysis, including yours truly most of the time, but this is a technical thing that we're looking at. They don't look at what we're looking at. They're looking at fundamentals. The 200-day moving average is still up. All that stuff is still looking pretty good. But so there will be some buying this morning somewhere. I don't know if it comes in right on the open or whether it comes in, a half hour or 2 hours later, but there should be some buying coming in. If it doesn't, well, we could be looking at something really, really nasty. The volatility is here to stay. There's no question about it. You can see it daily as you watch some of these things, and some of these things happen overnight, so it gets to be a pretty wild ride, as Mr. Toad would say. That was my kid's favorite ride at Disneyland, was Mr. Toad's Wild Ride. They liked that still when they were teenagers. I don't know why. It must have been something psychological, but they certainly liked it. Now, I wanted to mention the relationship now. This is from our good friend Todd Gordon at Trade Precision, and he's also a regular on CNBC, former student. Anyway, this is the Treasury bond, and it shows the relationship between the S&P 500 and the Treasury bonds, and how this is going back 30 years, folks. And you'll see there's only been two areas where they go contra to each other, but that can happen. The bonds and stocks can go down together. So just remember that is a possibility. Just follow what I try to do. And someone asked me yesterday that they were fortunate enough to get short the S&P up at that fib point yesterday, and wanted to know how they could hedge themselves against the euro versus the dollar. And I said, this is beyond my pay grade, because you should look at each one of them separately, because they're separate entities. And if you're going to try to hedge yourself, you're not there to hedge. You're there to make a living. One of my funniest experiences for Conti Commodity way back in 1969 was a guy named Lad Hitch out of Guayman, Oklahoma. Was the large, and they still are. They were the largest suppliers of beef to McDonald's on the west coast of the United States. I mean, all of his beef went through McDonald's, and it was a huge operation. And he would come in 3 or 4 times a year, usually to play the horses and see the Lakers play and stuff like that. And he was in the office one day, and cattle were going crazy, and the guy said, "Are you hedged?" And he said, "Yeah, I got a Texas hedge. I'm long the cattle and I'm long the futures." Okay, we'll be right back after these few words from our sponsors.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened, and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we are right now we are setting at the 786 retracement of the low that we made just a few days ago, back on the 11th. That was the Friday, so we've all we need for a weekly reversal, you see, is another 10 handles down to 1930, around 1935, somewhere in that ballpark, and that would be it. But right now we're setting right at a 786 reversal in the market. Whether we're going to see if that holds or not, remains to be seen. But it's been one heck of a move. You stop and think that we've dropped almost we've dropped 70 handles in just a matter of a few hours of trading after the esteemed leader gave us her thoughts on the world. I frankly believe if she hadn't have said anything about the part with the what am I trying to say, with the China thing, I think it would have been, far better off. But that's just my opinion, of course. And opinions are like armpits. Everybody has one, and it usually smells. So that's just an opinion. All you got to watch today, folks, in my opinion, is watch this 1938 level, because if we break that, that gives us a price objective of 1550 in the S&P. And we made the first 300 points down in a matter of 8 trading days, from the 29th of 6 trading days, from the 29th of August to the 24th of August, and we made 30 handles there, and so it's 300. We made 300 handles there, and we could easily do that, and that would take us down to around the 1770 level, which is the key level. Like I mentioned before, when we had Norm Winsky on with his spectacular call about Mercury retrograde and the chart that he furnished us. We also had Bill Ehrman from Ehrmanometry, whose book I certainly recommend everybody have. That'll be on the top of everybody's list. It'll be out soon, I believe, but it's not cheap. I think it's $250, but it's worth every penny and 10 times more, in my opinion. But he's the best timer that I've ever seen in my 55 years, and that's what that's what I'm looking at, because he said, it'd be either the 17th or the 18th would be on a scale of 1 to 10, it would be a 9.5. He always jokes that it's a Mary Lou Retton as a 10, but it turns out to be a 9.5 is what he said, so we'll have to wait and see. We had one question from one of our dinners about other timing techniques that have I been exposed to, and one of the very first ones and how I got interested in astrology big time was when I was at Drexel. I had we had a business there where we traded the firm's money. We took very, very few customers off the street. There were maybe a half a dozen of them. And one day a housewife came in and said she knew how to trade silver, but she didn't have any money. And I said, well, how do you trade it? And she said, well, I use astrology. Well, I had dabbled with Jim Twentyman with Gann for quite a while, and Gann had used astrology, so I had a little interest, and I had a few extra shekels in my pocket. So I said, look, I'll open a $5,000 account with you. We'll trade the silver together, and you let me know. And she said, okay. And she said, how do I get the signals? And she said, I'll call you and tell you when to buy silver, and I'll call you when to sell it. She says, I'm never in it for more than 3 days. And I said, that sounds good. So the first day she called and she said, let's buy silver at 7:38 in the morning. And so I said, okay. And so 7:38 in the morning came. I called Goldberg Brothers, who was our clearing firm at Drexel, and I talked to the young one, Richie. I said, buy me one contract of, I believe it was March silver at 7:38. And he says, 7:38? He says, what are you talking about? He says, it's trading at 11.90. I said, no. I went 7:38 in the morning here in California. What are you doing now? He said. And I said, no, it's just a simple timing thing. He said, you want it at 7:38 in 1 minute or 7:38 at the top of the hour? Is it exactly 7:38? He said, you've got to give me a DRT. That means disregard time. I said, okay, buy it at the market. So he bought the silver at the market, and that went on. She called a few days later, and it was profitable. She went on and made 19 straight winning trades in silver. What she was doing is she was buying silver, but being out of it during the time when the moon was void of course in silver, which was a period of about 20 hours, as I recall. This is all from memory, and it could have been a sell. I'm not sure. But anyway, we did this for so many years. Well, what happened was she would call like every 4 or 5 days. The moon would come into that, and that would give the signal. But I'll finish the story. We come back after this break.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization information capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and the market has opened now for about 5 minutes so far. The 786 retracement that we talked about just a few minutes ago down there, it's 1945 in the S&P has held. That was also a small ABCD pattern from overnight trading, but it was a very small one. So this is going to be a key level to watch. We've rallied 13 handles so far off the bottom, much as anticipated, because you're still in a bull market. And they're, like I mentioned, these folks that are out there that do technical analysis, they're in the 3 to 5% category at the most. And so they really don't believe, you know, what we do, that the sum total of all buying and selling is reflected in that bar chart. So that's one of the factors that we're looking at here on the bounce. So we'll see whether this is going to be a really a strong bounce. In fact, it's been a bigger rally. This is the biggest rally that we had since the market started to break up at 2012. This is the largest rally. The only rally that we had last night was about, let me see, how much was that rally? That wasn't too bad, though. That was a pretty good one, too. We rallied from 73, we only rallied 10 points. So we rallied, a little bit more than that last rally to start off with. The deflationary scenario of some of these things is still in effect. We've got crude oil is now down at the 61% retracement of this last 5-day run, where we've gone from 43.50 up to 47.95, which was a 786 retracement, and just now we just made the 61% retracement there at 45.15. So that should be some support in oil, but overall the commodity markets are still under a great deal of pressure, and even copper has given up quite a bit of its move. Only gold and silver have held up relatively well. And as we mentioned earlier, silver hit a spot-on target at 15, 40 today, with the high being 15.43. It's about 15 cents under that right now, but that's neither here nor there. The key to watch, folks, is this stock market, because if we close below this let's say 1940 level in the S&P, we're down 20 some handles, which in itself is a very unusual event. And the market, if it's really bullish, it could come in and get really strong and take it all back. And this is the key that we're looking at, so far when we're watching this stuff. So just watch that. This is going to be a really volatile time here that we have going on. The VIX index held minor support yesterday, but it was quite wild. Also, people are still taking protection to increase the volatility of what we have, going on. To see what's happening. Now let's change pace here a little bit, and we'll take a look here at a little market that is not nearly as crazy, and it is certainly tradable. It's one of Rich Anderson's famous trades, and that is the cattle market. As you can see here, looking at October cattle, we're completing a butterfly pattern over the past month. And we're also completing some major ABCD patterns going over the last 9 months and then also the last 3 months. So we've got 3 major ABCD patterns, 1 minor ABCD pattern, and a butterfly pattern, telling us that we want to be looking to buy cattle around the 135 a pound level, and that would be something that I think would be pretty interesting to look at. Oh, we've got a caller in from Nashua, New Hampshire. Lou, are you there?
Yes, I'm here, Larry. How are you doing?
I'm good, my friend. What can I do for you?
Okay, I've got Nugget ETF for gold miners, and I'm just wondering if we should hold or sell.
What I would do? I would sell. And I think that the market itself is in really vulnerable right now. Maybe at the end of the day, it's not going to be, but gold has reached the objective. If you wanted to be safe, you could just wait till Monday, because if I'm wrong, gold's going to turn around and clear 1140, and then it could be off to the races. So you could wait till Monday, but if it's not working Monday, then I would get out of it.
I see. And what about shorting the S&P at this point?
Not here. No, this is down 70 handles from the top. It's just it's too risky. You could rally 50 handles back and still be bearish. This is it's one of those times. And see, once the market opens lower like this and bounce off the bottom, people are starting to start to what they call window shop and pick up things that they want to own. So I certainly can't. What you want to wait for is a really nice ABCD pattern, to unfold, and that would be the best kind to look at. Let me just show you that right now in the Nasdaq. This is what was happening last night. I'll put this into Tiger TV so you can take a look at it, and you'll be able to see the ABCD pattern that's forming right now. Last night, you'll see that small ABCD pattern. And if you looked at the big one from the range up, that measured down to the 4,300 level in the NASDAQ, and that got to 4298 right before the open, and it's already rallied 30 handles. So you want to wait for one of those types of patterns. Otherwise, you really don't have any place to hang your hat, so to speak, to see what's happening, because it's still too early. I mean, this was just a one-day phenomenon, and maybe it'll turn and reverse and get everything, back. I mean, you just don't know. So you can't do anything here, in my opinion, my friend. It's just too risky.
Okay. Very good. Thank you, Larry.
Now, if you want to short it, Lou, wait till the close. If you're below, if it's getting towards the end of the day and you're below 1945 in the December futures, then short it, because it's not going to open sharply higher on Monday, I don't think. And that would be what I would be watching anyway.
Okay, Larry. Thank you.
Thank you, Lou. Thanks for calling in. I appreciate it. Hope to get up to your state someday. It's a beautiful, beautiful state.
I hope you do.
Okay, thanks a lot.
Not during
You
the
bet.
winter. No.
Okay, folks. We're getting still getting a pretty good rally here. We rallied up, like I said, 14 handles in the S&P so far. The gold is still up on the day, acting relatively strong. Silver's backed off a bit. The euro's backed off about 50 pips from its high, so it's still relatively quiet in here. So we'll keep an eye on some of these other things that are going on. The bonds, it looks like the first stop on the bonds is going to be, we're trading at around 155, 154.28 in the Treasury bonds, and they should easily make 156 on this run. That's 5 handles off, because each time we've had a big rally in these, the bonds have gone about 5 points. So that's another thing that you want to be looking at. See, we've got the S&P has already rallied 15 handles off the bottom, and it's only been open for 8 minutes. So, the more if it gets more power coming into it, then you'll be able to look at it. Now, one of the things from a technical standpoint, if you just wanted to be just to see what's going on here, if you just take the high that we made to the low, we shouldn't get any higher than 1970 should be the high that we should make on the S&P if it's really bearish. And all that is a 382 retracement from the high we made at 2013 yesterday during the Fed time. We broke down in that big reversal till this morning, where we completed the ABCD right at the 786 retracement at 1945, spot on. The low was 1944 and a quarter. And right now we rallied 15 handles from there. But if we rally another 10 handles, that would be up 25 handles from the bottom. That would be a 382 retracement. And anytime we get above 1975, then there's a possibility this thing could go a great deal higher. Now, the cycles and the chart path, the cycles, the ones that we looked at with Norm Winsky and the one we looked at with Bill Ehrman. We also had the Bradley model telling us that we had something really big coming in this week. And then also we had the shooting star candle, which is the bearish of all the candle patterns, the shooting star, and then its mirror image, which is the hammer pattern, and that's where gold bottomed. About a month or so ago, down at the 1065 level, when we became interested in going long gold because of the hammer pattern. It's the same thing, only the shooting star is the reverse of that. So the key level to watch in the S&P is that 1970 level. That would be a 382 retracement of the movement. And remember, this is the first, we've only been open 15 minutes, and this is just the early morning stuff that's going on. And this is not the real big orders. The real big orders don't start coming in until usually about a half an hour, after the market's been opening, and then they start. It's very unusual that they come in all at one time on the open like they did on August the 25th. There's no fear in the market. You can see that in the VIX index. I mean, there's just absolutely no fear anywhere. And even with the reaction yesterday, they talk about it a little bit, but they don't talk about it from a technical perspective like a technician would, because it looks like an outlier event with that shooting star and reversal coming in at a major time point. So that's one of the keys that I would be focusing on today. Are the market action between 1970 in the S&P, should we get there, and it's very easy to get to that point. And also, if we go below the 1945 level, that would also be telling us that we'd be looking at something a little bit more drastic. If we get gold to close above that 1145 level, folks, it's off to the races, because there's no other numbers there up until 1170, and we could make 1170 today in the gold with a really crazy market, and people start to realize that maybe some of this funny money that's out there is going to have a hard place to find a home eventually, but we'll wait and see. That'll happen, I think, if we see gold and bonds coming down together. We have not seen that yet. It can happen, but we've not seen that as of yet. We've not seen any panic in the euro. We've not seen any panic in the pound or anything like that. So I don't think there's any reason to think that there's more of a currency war going on than we already have. So that's the way it's looking right now. Keep your eye on something is watch that cattle, because cattle is that's a perfect pattern. I mean, that's got all the things that a pattern recognition trader could ask for. It has 3 ABCDs. You're trading with the long-term trend. This is your really good buying opportunity, your first major one in the last 6 months, and all of it's saying that it should get down to the 135 level, and we're trading at 136.80 this morning. So it's right in the ballpark of what we're looking at. I've had a request to take a look at the grains, and I just don't see much to do here. I mean, wheat pulled back to a 61% retracement again this morning, but frankly, I just don't see a lot to tell us that this is what we're looking at, at least from my perspective of what I'm watching here. So I hope that helps. But the key is the stock market today, folks. 1945. If we 1945, we make a new low near the close, we're going lower. This is not even a down week yet. It will be if we get down there, but if we close in the right where we are now, it would still be an up week. So there'd be no reason for anybody to even be selling stocks that are. Why would they be concerned? Just because there was the Dow was not down very much yesterday. There was nothing really dramatic happening other than the 300-point move during the Fed time. But that's technical stuff that technicians and pattern recognition and Fibonacci people look at. The number of people who look at Fibonacci is 1% of the market, if that. So, and some of it, a lot of times it doesn't work, as we all well know. I was joking with Norm Winsky early this morning, about the fact that he made a really good call in May and a really good call in yesterday, and I said, you're welcome to come on board. I said, the first time, you're wrong, you're going to be in the cheap sheets. And he said, sure, I understand that. So that's the nature of our business, just like the restaurant business. You're only as good as your last meal. So we'll see what happens here later on as the market moving. If the market is really bearish, folks, we're going to go through 1945 like it didn't even exist in the S&P, and then look out. Much like what happened in the German DAX this morning after it gapped down 100 points. It stayed there for about 20 or 30 minutes after a small rally, and then once it started to break, oh, gee whiz, it certainly didn't have any friends at all. It was really, really nasty. So just watch these things as we got a break time coming up here pretty soon. I got one other question about Apple. Apple didn't rally as much as some of the other things did. If you'll notice on your charts, how many shooting star patterns are there? I mean, they're everywhere, which is from a technician's perspective, boy, that's a giant red flag. I mean, in other words, the market's going up there. It was panic buying, and then all of a sudden, there was a change in the continuity of thought, and then all the buyers became sellers, and that's not a good thing. And especially if you're in the late stages of a bull market, that's key of what you're watching in here. All right, this is it. We're going to take a little break here, and then we'll wind up the show. 877-927-6648.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This coming Tuesday, September 22nd, Tom O'Brien will publish the 700th issue of his weekly newsletter, The Gold Report. It's amazing to think that Tom started his newsletter over 13 years ago when gold was trading under $300 an ounce. To celebrate the 700th issue, you can sign up right now at a 20% savings off the regular monthly price, and you can lock in that low rate for as long as you remain a subscriber. The Gold Report is Tom's weekly newsletter covering the gold market as well as a variety of gold mining equities. The Gold Report is published every Tuesday afternoon with a market update sent out to subscribers on Monday mornings. Tom will walk you through what's going on in the gold and metals market each week, as well as providing specific buy and sell recommendation on the mining equities themselves. Now is the perfect time to sign up for the Gold Report. The 700th issue is published Tuesday, and that's when this sale ends, so act now. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, we're back, folks, and fortunately, Jim Twentyman was listening to the show over in California, and he kindly reminded me to finish the story about Mary Rivers. There was a lady that traded silver. Well, she would give orders, occasionally, every 3 or 4 days. Jimmy said it was about 7 days, so he's probably right. His memory's better than mine. But in order to remind me what time to put the order in, instead of just buying it at the market or at a price, like a broker normally does, she was using a time phenomenon, and so I had to get an alarm clock. So I sent my secretary across the street to Walgreens there in Beverly Hills to pick up a alarm clock for me. Well, she comes back, and she picked out one that had the loudest thing. It was like a fire bell at a firehouse. It was terrible, and every time this alarm would go off in the office, people would just joke about it. It was really funny. Anyway, after about 7 or 8 winning trades in a row, I put her trades in on the wire network as opposed to calling them in, because they were related to time. I would put the order in at the market right at the exact time. Well, people would start to coattail her. Other brokers would, buy a contract or two of silver, and so it was really quite amazing. After she left, and she left very unusually, because she used to sit over in Santa Monica, California, in the boardroom of Dean Witter, and I think someone over there made her a better deal after they saw what she was doing. But what happened was she basically was using moon void, of course, and what we did is we knew the time of the trade, so all we had to do was to go to an ephemeris and find out what was there at that exact time. We figured out that it was moon. Moon was in void, of course, in Scorpio. I think that's correct. I'd have to look it up. And it works really well. But remember, she was only buying silver, and she was buying silver during the 70s, from 77. She was about a year and a half she was with me. So it was, the silver was going up. So there could be a 20-cent drop during the time when she was in it, because she didn't use stops. And then the market would go back and be profitable, by the time that the next trigger signaled. So I'd have to look what it was. Anyway, remember, folks, 1945 in the S&P on the downside, 1970 on the upside. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.